Make no mistake, the architect of the BRIC currencies is not Russia, it's not China, it's not India, it's not Brazil, it's not Saudi, it's the US. We have backed people into a corner as a consequence of our own financial profligacy and our wanton attempt to enforce our preference extraterritorially that has caused this to occur.
This week's special is 1 ounce silver Britannias for only $4.50 over spot. Here at Liberty and Finance, we are licensed brokers with Miles Franklin Precious Metal Investments. We are standing by the inventory, taking orders into the wee hours of the night and on weekends, because preparedness doesn't stop. Call us at 1-888-81-LIBERTY. That's 1-888-815-4237.
Welcome back to Liberty and Finance. We're always privileged to have this returning guest, legendary investor Rick Rule, formerly the CEO of Sprott Asset Management, now the CEO of Rule Investment Media, joins us again this Tuesday, July 11th, 2022. Rick, thanks for coming back on Liberty and Finance.
Always a pleasure, Dunnigan. Thank you for having me back.
Well, it's a pleasure for our viewers, too. We have over 71,000 subscribers and growing, and they always snow me with questions ahead of your arrival, so I'll be picky and choosy this time and try to focus it down. And also we want to make sure before we let you go to talk about the upcoming conference, the Rule Symposium on Natural Resource Investing that's coming up in less than 2 weeks here in Boca Raton, Florida. So we'll get to that in just a few minutes. But first we wanted to talk to you about sort of a big picture item to see what your take is on it if you watch that. And that is the news story that came out this weekend about Saudi Arabia being in talks to join the BRICS Plus organization, which would be a global pivot away from the dollar. And there's a lot of implications around this, but the reason I'm asking it to you specifically is about natural resources, because a lot of the gist of this seems to be around petroleum and other trading that's been happening, such as fertilizer, etc., or energy of various kinds regarding Russia, China, etc. Can you talk to us briefly about what your perspectives are on the potential for this growing consortium of non-U.S. Financial interests that are turning away from the dollar as a medium of trade regarding natural resources?
I think the United States is in some senses giving them no second choice, which is to say the weaponization of the dollar, the weaponization of the SWIFT banking system, the extraterritorial enforcement of U.S. law and U.S. policy, I think gives countries and societies who find some portion of our foreign policy objectionable, we in a sense are giving them no alternative but to form their own trade mechanism. Make no mistake, a BRICS currency will never be a reserve currency for global trading. There isn't sufficient opacity in those economies, and there won't be sufficient volume. But to the extent that the US dollar loses some of its market share as a medium of exchange, in other words, if Russia is able to sell to China in renminbi, or Saudi is able to sell to India in dirham, and then those currencies in turn are converted, or better yet, from my point of view, stored in precious metals, so be it. And make no mistake, I think that the complete domination of the medium of exchange and reserve currency by the US dollars is bad for everybody, the US included. The seigniorage, the ability to print currency and export our bad habits to other countries, has a moral hazard, and that moral hazard is writ large in American politics. The truth is that we've lived in a no-fault zone for 40 years, which is to say we haven't been punished for our sins. And the consequence of that is that American sins have been many. And so while I don't like necessarily a lot of what has transpired, I certainly understand it. You know, Some years ago, Dunnigan, you asked me about the proliferation of cryptocurrencies. And I don't know if you remember this, but I said I'm a consumer of currencies. I spend euros, I spend New Zealand dollars, Canadian dollars, American dollars, Swiss francs, and I'm always delighted when groups of people organize to create a new currency which might serve me better. This is the market, finding a medium of exchange that will allow those host countries to pursue interests which they see as their interests, not our interests. Make no mistake, the architect of the BRIC currencies is not Russia, it's not China, it's not India, it's not Brazil, it's not Saudi, it's the US. We have backed people into a corner as a consequence of our own financial profligacy and our wanton attempt to enforce our preference extraterritorially that has caused this to occur.
As long as you're on the topic of currencies that allow sovereign countries to pursue their own best interests, why not the most obvious universal one that has no sovereign affiliation, but it's universal, and that's gold?
Well, I think that's a wonderful mechanism for people-to-people exchanges. Governments hate gold, except to own it. If you are a politician and you go on a gold standard, what it means is that you have obviated your power over markets to a neutral medium of exchange. No politician has any interest whatsoever in moderating their power. Power is the currency of people who go into government. It's what they live for, the ability to distribute property taxed or stolen, depending on your point of view, to people who you believe are more deserving of that property is precisely why people go into government. And the ability to no longer steal from the unborn with regards to debt, in other words, the appearance of a gold standard, limits the power of the politician. So while Mr. Xi may cause China to buy gold because he doesn't trust the U.S. government and because he doesn't want to hold U.S. dollars, does not mean that Mr. Xi has any interest whatsoever in a gold standard, which would prohibit him from committing the same sins that dollar sovereignty has allowed us to commit.
So is it just a matter of ignorance on the part of the people that allows this to persist? Because it almost seems like, and you're way ahead of me always, that you've laid out basically the devil's advocate case for why this is a tremendously good idea for the people. And so the 99 point whatever percent versus the career politicians who are, basically a parasite on the rest of us. It seems like if the people understood, it would be good for you to disempower your servants. In fact, you said politicians go into it for power. I hope that there are a few who go into it to serve their common man, and that's by rights what they should be doing. So is this just simply a matter of lack of education on the part of the common man that permits this to persist?
We could do a whole show on that, but let me try and unpack it. I think that we are coming through a period that has been pretty benign with regards to the world economy, and as a consequence of that, fairly benign to the political class. The period 1982 to 2022 was probably the easiest period known to humankind. The consequence of that is that there was widespread faith in the system that existed. The economic system, the currency system, the government system, the idea that the Fed had your back. This period was marked by low inflation, relatively low levels of nationalism, increased levels of trade, world peace. Did I say declining interest rates? Anyway, I would argue it's over. I would argue that we are in a less gentle period that will be marked by more volatility. It will be marked by increasing interest rates. It will be marked by more nationalism, more conflict, less trust. And I suspect on a going forward basis that more and more people will come to recognize that the big thinkers of the world don't have their interests at heart. Now, the truth is, for the last 40 years, from an investor's point of view, if you were long U.S. Treasuries and either absent gold or short gold, you did well. So one needs to wonder who's intelligent. Maybe it was them, not me. My suggestion is merely that the benign economic and political climate that we've existed in for the last 40 years is over in some way, shape, or form. I don't know what the future is going to look like. All I can tell you from my own point of view is I am delighted to own bullion. And in fact, I'm delighted to see the bullion, quote, fairly weak, particularly in US dollar terms, which will allow me to add more. It's very difficult for me personally, Dunnigan, to see an excuse for me owning the US 10-year Treasury. I think it's issued by a bad credit. I'm their collateral, and I'm unwilling collateral. And I think it paying me 3.5%, it's now up to almost 3.5%, in a currency where the purchasing power is declining by 8.9%, is a really bad deal. The consequence of all that for me is that diverting increasing amounts of my savings, that is the savings that I demand liquidity on, into bullion seems like a very good idea.
In that last part, you talked about the potential better move it would have been to have been invested in treasuries and in the equities, basically in the system, rather than voting against it for the past 40 years. However, in the spirit of follow the money, don't do what they're saying, do what they're doing. Is it not true that for the past 2 years plus that the world's central banks have been acquiring more gold than they had like in the previous 60 years, and then the reclassification of gold as a tier 1 asset and all that? Are they not, I guess, undeniably in plain view positioning themselves for this next phase that you've just described?
I think that's very true. And whether or not that move is political, I think in some senses it is political. The Russians and the Chinese, as an example, don't want to have an asset class on their books that the U.S. government in capricious fashion could simply cancel. But I also think the arithmetic around the dollar has gotten markedly worse in the last 2 years, which is to say that the product of 40 years of profligacy is beginning to be seen in global markets. So the arithmetic around continuing to own U.S. Long-term paper is beginning to be exposed. There were countries that decided to hold the paper longer than they needed to because a strong U.S. dollar was important to their foreign policy. In other words, it helped them get along with the U.S. And also a strong U.S. currency relative to their domestic currency was good for their export industries. It's just that a circumstance where their savings are yielding them 3% in a currency where their purchasing power is declining by 9%, that policy objective became arithmetically untenable.
It's almost like the old European strategic marriages of convenience or whatever, and now it's becoming too expensive to maintain. So we got to go back to war again. Regarding the wisdom of sitting on cash, sitting on the sidelines, being a contrarian, that sort of thing, we have a specific question from Willem de Velter who says, how low does Rick Rule go percentage-wise on his cash position in order to be able to invest further? Nobody knows where the bottom is. Only in retrospect can it be determined.
I'd be very comfortable having 10% liquidity. I'm more disciplined than most, which is to say, if after I get myself down to 10% liquidity, we have a sort of dramatic sell-off, I'm actually fairly mature about selling stuff I'd like to hold and using that proceeds to fund things that I'd like to hold even more. Many investors don't have the ability to sell a good company that's down by 30% in favor of buying a good company that's off by 60%. I do. So for me, having a 10% liquidity slice, and I should say that this really depends on the size of your portfolio and your needs. I'm 69 years of age. I've worked hard in life. I've been very lucky in life. And my portfolio relative to the needs to get my wife and I through our remaining years is more than sufficient. So for me, the liquidity allocation is more a strategic than a sort of a tactical function. In other words, I'm not going to have to worry about my living expenses. There are other people who unfortunately aren't in my position. And those people are going to have to maintain liquidity simply because in an ugly downturn, their ability to fund their living expenses other ways might become challenged.
We've got a question here related to what you just talked about selling things which you would like to hold on to because you see another greater opportunity. This question has come up before. Forgive me for asking it, but it's another year has passed, and you may have a new nuance on your answer, and that is Craig McIlvor says, what silver and gold price should we start taking profit on the next leg up?
I don't know. If you're talking about bullion, I think it depends on your purpose for owning it. For me, gold and silver purchases are almost always strategic, which is to say gold for me is an insurance asset. Maybe some of my silver trading is tactical, to be honest with you. Later in a bull market, the silver market tends to outperform gold. So I guess with regards to my silver, that's more a trading vehicle. But the truth is, I will continue to hold my gold as long as we're saying quantitative easing, as long as we're seeing continued debt and deficits, and as long as we're enjoying, if that's the right phrase, negative real interest rates. Many people, Dunnigan, in fact, almost everybody that you and I talk to, values their gold in US dollar terms. I do too in moments of weakness, but the US dollar is in fact a floating abstraction. And one of the things I've taken to doing on a sort of a monthly basis is informally recasting my personal balance sheet and my income statement in grams. In other words, at least going through the thought game of transferring onto my own gold standard. So for me, the question isn't so much how you price gold in US dollar terms, because the US dollar is a floating abstraction. My selling gold would occur if we had positive real interest rates, which is to say, if my reason to avoid bonds disappeared. And frankly, if there was an asset class that was attractive enough that I wanted to come out of liquidity and into that asset class. I regard gold as a store of wealth and a medium of exchange, and I am certainly willing to exchange it for something that I think will benefit me over time. At present, I find the price level of gold extremely attractive, and I find the whole set of circumstances which would cause me to want portfolio insurance to be very worrisome.
Well, that's another thing, I guess, as long as we're on this topic, let's press this a little bit, because I've spoken with so many people around this topic that I'm convinced my wife and I weren't the only ones who are under this kind of this thought prison of ever since we were children, we were told it's as safe as money in the bank, or you sell, whenever you earn something, save it away in the bank, or when you sell something of value, save it away for a rainy day in a savings account, that kind of thing. But now people who are selling properties, a lot of baby boomers are nearing end of career stage. They've got retirement accounts coming available to them, maturing. They've got maybe their big house that they raised their family in. Now they're empty nesters. They're going to downsize. So they've got these liquidity events happening, and yet people aren't thinking, I believe, about what does it mean? Where are you going to put that value? What are your options really for putting that value? Because you've talked about having liquidity on the side, and I think that the assumption most people make without even saying it out loud is, I'll put it in dollars and I'll put it in a savings account, and that's where I store my value while I'm waiting an opportunity. But from all we're hearing from John Williams from shadowstats.com or from the Fed themselves about the destruction of the purchasing power of the dollar and systemic risk to the banking system, we're hearing from Alistair McLeod, is that perhaps dollars in the bank is a terrible place to store your nest egg. And so people just don't think through, well, where else can you put it? And that's what you were just sort of talking near, but I wonder if you could just zero right in on that.
Well, I have too much liquidity right now. I am one of those people who has sold a substantial amount of real estate that I've invested in over 40 years. And the consequence of that is I have, relative to my needs and relative to my history, a lot of cash. And most of it is stored in US dollars, looking for a place to put it. Looking with some urgency, although I've joked about this before, I've had periods of time in my life with a lot of cash and periods of time in my life with no cash. And I've always been happier when I had lots of cash. I don't feel too bad about the circumstance. I think most people need to understand that famous Doug Casey quote with regards to currencies, which is to say the US dollar is the worst currency in the world, with the sole exception of every other one. Damning dollars by faint praise. But I believe, despite the fact that dollars are declining in value, because they're the medium of exchange, you have to maintain some US dollar liquidity. I have been a fairly substantial bullion buyer. I have also been a fairly substantial buyer of other types of assets which I consider to be undervalued, including, of course, physical uranium through the Sprott Physical Uranium Trust. But the truth is, I'm way, way, way overbalanced to cash personally. And the consequence of that is that the declining equity prices that we see around me delight me because I'd like to put it to work.
Those declining equity prices, though, I mean, we need to talk about that because people are saying we're entering this perhaps long and grinding bull market, and so it can be way too tempting early in such a market to see dips in the context that you might have seen them in the previous 40 years. As you mentioned, we've been through this amazing sort of miracle mile, 40 years of buy the dips and you'll be fine, the Fed's got your back, etc. Do you think people who are ready to jump today into dips in the equities markets may be having normalcy bias that's dominating their thinking rather than really realizing we're in a new era?
I think it depends on who they are and how much work they do. As an example, Warren Buffett has been an extremely aggressive buyer of equities this year, often oil equities. And I would suspect that given the fact that Mr. Buffett sees an imbalance between the reality in energy markets and the way that they're priced, that he'll do extremely well. Might those stocks go lower for a year? Absolutely. Will that cause Mr. Buffett to change his mind as to what to have for breakfast? Absolutely not. Will he be rewarded over 5 years for owning those stocks? Extravagantly. The point of all that is I think it depends on who you are and what you're buying. I don't any longer regard markets. I regard them as facilities for buying and selling pieces of businesses, rather than as information in and of itself. The major U.S. equities indexes this year are off by 20%, which suggests to anybody sort of conversant in math that the equity markets are 20% more attractive than they were at the beginning of the year. The GDX, the major gold miners index, is off something by like 30%. The GDXJ is off by something like 38%. You will recall, again, a year ago, my saying that I wasn't finding juniors value in the gold juniors. Now I'm beginning to see some value in the gold juniors. If I see a stock that I think is likely worth $2 and it's selling for $1, I will happily buy it. And if it goes from $1 to 65 cents, I will delightedly buy even more. That's the way I work. I think that I need to have a feeling about value before I care very much about price. If I have a feeling about value, I'm delighted to see prices fall because I'm delighted with bargains. I recognize from reading the comments after our interviews that many people are less patient than I am, less comfortable with volatility, less willing to do work. I've had lots of people say, I wish Rick would shut up and just give us 3 stocks, meaning that people don't want to do the work associated with allocating their own capital. They want the tooth fairy, or in this case, Rick Rule, to sort of hold their hand and obviate their personal responsibility for their own portfolio. But I ain't going to do it.
Now, in passing there, you mentioned Warren Buffett and oil or petroleum stocks. There's been quite a bit of talk coming out about the increase in fuel prices already, but potential for much greater increases in the year ahead or the period ahead. In fact, there was just an article that came out from Bloomberg yesterday saying that the worst of global energy crisis may still be ahead. And there's a quote here from the head of the International Energy Agency, quote, "The world has never witnessed such a major energy crisis in terms of its depth and complexity," IEA Director Fatih Birol said Tuesday at a global energy forum in Sydney. "We might not have seen the worst of it yet. This is affecting the entire world." So that dovetails into a question from a viewer from Jeff Harbach, who says, mitigation strategies for peak oil. From your standpoint of looking at natural resources, are you in the mode of expecting oil and other energy sources to become the supply demand to become more imbalanced going forward? What are you seeing, both, I guess, from an investing standpoint, but also from a human impact standpoint?
Wow. Okay. Let's begin with it. The oil outlook over 5 and 10 years is great. The big thinkers notwithstanding. You got Merkel and Biden and Trudeau and all these morons who decided that the world should use less oil. And then you have consumers around the world who like things like cars and plastic bags and fertilizer, who are using more oil, despite what the big thinkers have told them. Because I think largely of the message emanating from the big thinkers, cost of capital for oil companies has gone up, and they have deferred or eliminated a lot of sustaining capital investments. We've talked about this on your show before. It's estimated right now that new project expenditure and sustaining capital expenditure on a global basis in the oil and gas business is underfunded by about $1 billion a day. $365 billion a year. These are businesses where they are fairly capital intensive. You have to continue to make new project investments or sustaining capital investments, or your ability to produce declines. And that's what's in the face of us. We will have supply shortages. There's absolutely no doubt about it. Those supply shortages in the near term may be exacerbated because it would appear that both Europe and Russia are becoming increasingly oriented towards weaponizing Russia's energy exports. And if Europe is cut off from Russian oil and gas, it's going to be an extremely cold winter. The gas will be available, but it will be expensive. Now, on the other hand, if somehow, and I hope it happens, the Russians in the world find a way to resolve the Ukrainian circumstance peacefully, fairly soon, I think you would see a dramatic decline in the oil price quote, and certainly a dramatic decline in liquefied natural gas quote. You wouldn't need all those seaborne fuels if you would just open up the Nord gas pipeline. Is this going to occur? I have absolutely no idea. The other thing that I think you need to take into account, and I know your listeners want a simple yes or no. Yes, January 1st, oil will be $130 a barrel. December 31st, oil will be $160 a barrel. I don't have that, okay? The third thing that you have to consider is that all commodities markets, including copper, are beginning to factor in a recession. The commodities complex is absolutely acting as though demand is going to be curtailed, and curtailed on a global basis. And if that happens, and you and I have talked about this for years, if that happens, the supply shortages that we otherwise would see in oil and gas, in copper, in a whole range of commodities will be mitigated. You can cut demand if you cut, you can cut supply if you cut demand and not impact price. So if Dr. Copper is right, if the dramatic price quote declines that we've seen in the copper price herald in a synchronized global recession, and that could happen, then I think you'll see a real moderating in oil and gas prices. But I'm not smart enough to say if you'll see that. I joke, Dunnigan, and I said it on your show, I'm always nervous about a political economy. Between Doug Casey and I joke that we've called 17 of the last 3 recessions. And so I would ask your listeners to do their own economic forecasting rather than rely on me.
Okay, well, back right in your wheelhouse, you mentioned junior miners just a few moments ago. We have a question from Daniel Ostrom88 who says, and you already touched on this, but you can maybe reinforce it with a little bit more color. Hi, Rick, is now the time to back up the truck on junior miners, or is there further pain to come?
There is further pain to come, but this is the time to nibble, if not to gobble. The market, as represented by the GDXJ, is off by 38%. That's a major move by anybody's imagination. Could it fall to 50% off? Sure. Remember, a market that's down by 90% is a market that was down by 80% and then fell by half. So can it happen? What's particularly of interest to me, Dunnigan, is, as you know, I've been basically frozen out of private placement markets for 3 years because of unsatisfactory terms. A lot of issuers have played chicken with capital markets, waiting for the markets to go higher, and instead they went lower. So I'm looking at what I think is the probability that a whole bunch of junior issuers are going to have to come to market. And I'm hoping that they have to come to market in a circumstance where the market is unwilling to buy their wares, which means that they have to price them attractively for me. The big difference, I think, between now and the last time you interviewed me, I was saying buy the biggest of the bigs, buy the best of the best, buy the Exxons, buy the Francos, buy the Rios. Now I'm saying it's beginning to be time to de-emphasize the biggest and the best and take a look at the rest, because they've declined so precipitously in price. Well, I would argue they haven't declined precipitously in value at all. It's now beginning to look like the juxtaposition of risk to reward for those who can afford to take the risks is shifting towards favoring smaller rather than larger issuers. Traders, by the way, want to go the exact opposite. We are going into a risk-off world, which means risk is getting cheap. I like stuff that's cheap. Momentum traders want to do exactly the opposite of what I just said. The momentum traders want to look to a risk-off trade, and if they're going to be in the resource space, they want to be in the biggest and the best and the highest dividend payers. I go where relative values are the greatest, which means I'm beginning to go away from risk-off or high quality to risk-on.
You mentioned a few minutes ago your personal proclivity for perhaps speculating a bit in silver versus using gold as a store of value and liquidity. There's a question from Ed B that touches on that from a different perspective. Should I swap my gold for silver?
Depends on who he is. There's no one-size-fits-all answer. I'm not gonna. The truth is, to be completely honest with you, already made more than enough money to get me through my life. I want to preserve what I have. Gold does that. Earlier in my career, I took several fairly leveraged long silver bets. 3 of them worked out for me, 1 didn't. I regard silver as more a tactical than a strategic commodity. And my gut feeling is if you're going to go down that road, probably rather than buy the silver and accept the volatility in silver, you should buy the silver stocks. In other words, get the leverage on steroids if you're going to make the bet. Speaking
of gold and silver equities and that sort of thing, we've got the upcoming conference, the Rural Symposium on natural resource investing in less than 2 weeks in Boca Raton, Florida. Actually, it's 2 weeks from today. I think we're starting up registration, that sort of thing. And if people want to get signed up for that, they can. In the description of this video is a link that they can not only register for the conference, but also support this channel. Can you talk to us one last time prior to the conference on why people should seriously consider it if, as you mentioned, most people don't have the wherewithal or the time, or don't believe they do, to make a real credible job of doing all of the analysis and all of the evaluating that it takes to really make prudent, responsible choices in investing in the natural resources space. So they look to stand on the shoulders of others, it's true, and to see farther that way. So is this not an opportunity to do exactly that?
I think it is, and thank you for the opportunity. This will be, I believe, my 30th Natural Resources Investment Symposium. We did 27 of them live in Vancouver. The consequence of COVID is that we had to do 2 of them virtually. This one will be live and virtual, but I encourage anybody who can attend it live to do so. There's lots of communication that is better done one-to-one. And I think investment conferences are one such medium. So why does this work? Well, first of all, we've stood the test of time. The fact that this is our 30th will tell you that we've delivered value 29 previous times, or we wouldn't have a constituency to have a conference. Why do we have the constituency? We have wonderful big picture thinkers, wonderful people who put the world into context because it's what they do for a living, and a context that you won't see on CNBC, or for that matter, in the Wall Street Journal. Jim Rickards, David Stockman, Doug Casey, Grant Williams, Daniela DiMartino Booth, Nomi Prinz, people who can make some sense of the world around them, and mercifully, who can impart that sense to you in fairly simple English, so that you yourself get the benefit of all their thinking. But probably more importantly than that, we have the best gurus and the best analysts that money can buy. Once you get some sense of the way the world works, how do you take advantage of it, or how do you keep from being taken advantage of? So the analysts are sort of there for where the rubber meets the road. What strategies are appropriate for the world as you see it? A unique feature of our conference, one that has been an attendee favorite for years, is the Living Legends. In the Living Legends series, we get together a group of people who have built multi-billion-dollar natural resource companies from scratch. People who literally start with an idea and build an 8 or 10, or in one case, a $35 billion company. And what's important about this from an attendee's viewpoint is that these living legends explain the process of building companies, explain how it's done, and explain what part of the process is identifiable by you as an investor. They explain the lessons that they learned that make them better investors, and they tell you how to become a better investor from the point of view, not of a broker who charges a commission or a newsletter writer who in fact gets a subscription, but rather from the point of view of a capital allocator and a capital consumer. It's absolutely invaluable from my point of view, this Living Legends. Another difference between our conference and other conferences is that most conferences, the exhibitors are regarded as revenue, as advertisers. My attendees have told me for 30 years that they consider the exhibitors to be content too. The consequence of that is that no public company exhibitor can be at my conference if we don't own them in a managed account or personally. Now, sadly, Dunnigan, that doesn't mean that every stock I ever bought goes up. What it does mean is that I have vetted them well enough that I've risked my own capital and my own reputation on them. At most conferences, as I say, the qualification to be an exhibitor is simply a check that cashes. And here, the bar is much, much higher. These companies have been, in fact, vetted for the attendees. The consequence of all of that is that this is the only investment conference I know that comes with a 100% ironclad money-back guarantee. Every education product, investor education product that I've offered in 30 years has come with a 100% money-back guarantee. If you come down to Boca, if you pay the tuition, and you don't think you got your money's worth out of the conference, we will refund you every dime. I'm delighted to say, going back 30 years, that I've had to refund less than 1/10 of 1% of the tuitions paid. That notwithstanding, from your listeners' point of view, if the paradigm from the big thinkers and the tactics from the analysts, the wisdom from the living legends, and the ability to interact with vetted exhibitors doesn't give you the value that you had intended, all you have to do is ask me for your money back. I would appreciate it if you tell me ways that I could serve you better in the future, but that's not necessary. Just ask me for your money back, and I'll give you your money back.
Well, that's very generous, Rick, and I'm delighted to say that, and my audience has already heard this, that I will be there in person. You'll be there, and so if they want to meet with us, they certainly can face-to-face, and we'll be delighted to meet all those who can attend there, in addition to all the better reasons that you mentioned of why they want to be there for educational purposes. And before we let you go, would you like to also re-up your offer to rank people's natural resource portfolios?
Absolutely. My offer is getting rather lengthy, but let's begin with it. I'm delighted to continue discussions with your readers about natural resources. The best way to start is what they care about, which is to say their portfolio. If you go to my website, ruleinvestmentmedia.com, enter your natural resource stocks. Once again, please, no pot stocks, no tech stocks, no crypto, just stuff I understand. I'll rank them 1 to 10, and I'll comment on individual issues where I think my comments might have value. In addition, in the question and comment section, if you are an accredited investor, if you'd like to know for free what private placements I'm participating in, write down. Note that this is only for accredited investors. Note, too, that just because I got in a placement doesn't mean necessarily that you will be able to. But if you'd like to know what I'm doing with my own money in this arena, write placements. You talked earlier about money in the bank. As you know, Dunnigan, I have large experience with banking, and I'm celebrating retirement by starting a new bank. If people care about my bank, if they care about a bank that will be in the top decile of deposit interest payers, that will be a focused lender to real people who can pay us back against viable collateral, an old-fashioned bank with money in it, all you have to do in the question and comment section is write bank. And as that information becomes available, particularly as we acquire our charter, we will keep your listeners up to speed with regards to a new kind of bank. This bank, by the way, will be of particular interest to people who own precious metals, because we will be, as far as I know, the only chartered bank in the United States that has a business focus on providing liquidity, which is to say loans for physical precious metals holders.
And they go to the website, they enter their stocks in their portfolio, they either enter the word placements or bank if they want that special information, or both, and you'll get back to them. How's the timeline coming on responses? Sometimes turnaround has been a challenge because of the demand.
Yeah, turnaround is a challenge. I'm in the midst of updating the rankings database, which has 800 names in it. And so I suspect that we're 10 or 12 days behind in terms of rankings responses.
Rick, as always, we're so grateful for your visits here with us. We've been speaking with Rick Rule, president of Rule Investment Media, and we really look to see each and every one of you, our viewers, in person at the Rule Symposium on Natural Resource Investing in Boca Raton. Check the description of this video. There's a link right there, how to register. Rick, as always, thank you for joining us on Liberty and Finance.
My pleasure, Dunnigan. Thank you very much for the opportunity. I am really looking forward to catching sight of you personally after all these years of COVID-inspired distance.
Yeah, it's been about 2.5 years since we met in your office in Carlsbad and got to shake hands there. So, yeah, it'll be great to see you again.
And in this particular case, we'll be able to cruise up and down the intercoastal canal on a boat, cocktail in hand, the best sort of office that we have.
Looking forward to that specifically. My wife and our son and my daughter-in-law will be there as well, so on the boat. So thank you.
Wonderful. Thank you.
Take care.
Miles Franklin Precious Metals is one of America's oldest and most trusted bullion dealers. Miles Franklin is A+ rated and accredited by the Better Business Bureau, licensed and bonded, and has 0 complaints ever registered. Here at Liberty and Finance, we are licensed brokers with Miles Franklin. To order, simply call us, discuss your needs, and we will let you know our live inventory, prices, and availability, and lock in your order over the phone. Once your order is locked, the price is held for you regardless of market fluctuations, and the metals are reserved for you awaiting your settled payment. Within 1 business day of ordering, you will receive an email invoice detailing the order and payment instructions. Miles Franklin accepts payments by bank wire, ACH or electronic check, money order, check mailed priority mail, and cryptocurrency. The fastest forms of payment are bank wire and cryptocurrency. Upon settled payment, metals will ship out within 3 to 5 business days. You will receive tracking information via email. Domestic shipping charges are $15 for any order under 500 ounces of silver or 10 ounces of gold. For orders larger than that, domestic shipping is free. The package will be double boxed, fully insured, and labeled discreetly, with no indication of the contents inside. For your privacy, the name Miles Franklin will not even be on the package. To talk to myself, Elijah, my brother Kaiser, or my father Dunnigan, call 1-888-81-LIBERTY. That's 1-888-815-4237.